All right, let's jump right in because we've got a really fascinating economic puzzle on our hands today. India just posted a record low inflation number, but as we're about to see, that single number hides a story of powerful opposing forces at play.
And here it is. In October, India's headline inflation fell to just 0.25%. I mean, on the surface, that looks like absolutely fantastic news, right? Prices are stable, the economy's doing great, but, hold on a second.
So is this number really telling us the whole story, or is it some kind of illusion? That's the big question we're going to tackle. We're going to peel back the layers here and find out what's actually driving this thing.
And this isn't just a random one-off number. We've seen inflation below the Reserve Bank of India's 4% target for 9 straight months now. So this incredibly low 0.25%, it's really the culmination of a bigger trend. And it's got economists and policymakers, well, they're raising some serious questions.
And look, this is where it gets really important. This isn't just some number for a textbook. The Reserve Bank of India, the RBI, they have to look at this data and make a huge call. Do they cut interest rates? I mean, that's a decision that affects everything from your personal loan to the country's entire economic growth. And the answer? Well, it's buried deep inside this puzzle.
So, where do we start our investigation? Well, the first major clue is a concept called the base effect. And trust me, it's pretty much the main reason the current inflation number looks so much smaller than it really is.
Okay, so what in the world is the base effect? It's actually pretty simple when you break it down. You see, inflation is always measured as the change in prices compared to the exact same month last year. Now, what if prices last year were unusually high? Well, that creates a really high starting point, a high base. So even if prices go up a decent amount this year, it's going to look small by comparison.
Yeah, think of it like a math problem, like a fraction. Last year's high price level, that's the denominator, the number on the bottom. And because that number was so big last year, it puts this huge downward pressure on the final percentage. It's a statistical quirk, really, but it has a massive real-world impact.
So just how big of an impact are we talking about here? It's huge. I mean, in October, this favorable base effect single-handedly dragged the inflation number down by 133 basis points. That's 1.33 percentage points. So get this, without that effect alone, inflation would have been well over 1.5%.
And if you think that's a big deal, wait till you see what it did to food prices. The base effect for food was a staggering 256 basis points. It was so powerful that it literally dragged food inflation all the way down into negative territory, to minus 5%. Wild, right?
Okay, but that's only one side of the coin. While this base effect is shoving inflation down, there's another, very shiny force that's pushing it aggressively in the exact opposite direction.
And that force is gold and silver. Now just look at these numbers. Together, gold and silver make up just a tiny fraction of the inflation calculation, a little over 1%. But their prices, they've gone through the roof. For 20 consecutive months, their inflation has been in the double digits. And in October alone, gold prices shot up almost 58% and silver over 62%. That is just an absolutely wild swing.
This brings up a really important question for the people making the big decisions. When you have items that are this volatile, items that are really driven more by global markets than what's happening at home, should they really be influencing decisions about a whole country's interest rates?
And this, right here, is the aha moment. Just take a look at the incredible impact bullion is having. The official rate is 0.25%, but if you just pull gold and silver out of the equation, the inflation rate completely collapses to negative 0.63%. Just let that sink in for a second. Without the price surge in just 2 items, India would officially be in deflation.
All right, so let's step back and put all these pieces of the puzzle together. We've got this powerful statistical illusion pushing the number down, and we've got a speculative asset boom pushing it way up. But wait, there's actually a third factor we need to throw into the mix.
So at the same time all this is happening, recent cuts to the goods and services tax, the GST, have also been helping to push prices down, as companies pass those savings along to customers. But here's the catch. This effect is temporary. And in fact, we're already starting to see some of those price cuts being reversed.
So here's the final scorecard of these competing forces. You've got the powerful base effect pulling inflation down. You've got the recent GST cuts also pulling it down. And then, fighting against both of those, you have this massive surge in gold and silver prices, yanking it back up. That headline number, that 0.25%, it's really just the final outcome of this intense economic tug-of-war.
Okay, so now that we understand all these forces at play, we can actually start to predict what's coming next. And spoiler alert, things are about to change. This little low inflation party, well, it's not going to last.
Remember our first big clue, that favorable base effect? Well, that statistical gift is about to become a statistical, well, a curse. Because as the calendar flips, those year-ago prices that were so high are about to become much lower. And that means the exact same base effect is going to start pushing the headline inflation rate up.
And look, this isn't just some wild guess. This is literally what the Reserve Bank of India is already forecasting. They see this unfavorable base effect peaking in January, and they expect it to drive inflation from where it is now all the way up to 4.5% by the middle of next year. That puts it right back above their target.
So what this all boils down to is this. The central bank can't just react to that flashy 0.25% headline number. They have to look through the illusion and see the whole complex picture. The temporary base effects, the super volatile bullion prices, the GST cuts that are already fading away. That is the real story of India's inflation today. Which, it leaves us with this one final thought. We're always told to watch the big headline numbers, right? But when a single figure can hide such a dramatic and complicated story, it really makes you wonder, what should we really be watching to understand the true health of an economy?